Are we about to see the greatest bull market that nobody saw coming? We're also going to have a look at the top trading shares this week and an update on the indices, as well as a history lesson onto what's leading to the market risk being to the upside. Gary Glover's written the report and is guiding us through this morning. Good morning, Gary. How are you?
Oh, you've stolen my thunder there.
I absolutely stole your thunder. I read your report and I will ask you the question, are we going to see the greatest bull market that no one saw coming?
I think we might. I really do think we might actually see a bull market here, which is extraordinary sort of low. You know, there's just, I mean, there was a few actually. I didn't include a tweet. I just sent it to you personally. There, a couple of clients that sent it to me, which I'd already read and stuff. There, sort of basically, it was sort of a measure of kind of where advisors sort of where they sort of sit bullish, bearishness, and so from like a 20, 30 year perspective, they're sitting down the lowest marking as deep as some of the worst lows in history. So, you know, GFC, growth crunch. So it's a really, really bearish consensus there is sort of through the roof there. So very negative view out there. Not too many people thinking the market can rally here. Everyone's pretty bearish. The question I sort of wonder here, Chris, is that, because I just think there's sort of like, if the bears have already done all their selling, who's left to sell here? That's the big question, I think, as well. As I think, everyone's positioned already on the downsides. Everyone's already got a negative view. So by the time you're telling people how you feel and what you think of the market, you've already positioned it. You're not going to sort of, let your secret out of the bag and then go and, do it after you sort of say something. It's usually after you've already positioned it. So, so I just think pessimism is really high. There are some sort of headwinds out there, obviously interest rates, inflation. Is this pending recession coming here? But the one thing we have seen here so far is that the data has been much more positive than everyone's been expecting. And everyone's been calling this recession for a long time now. And we're still sort of managing to avoid that. And the data's been a lot stronger than everyone thinks. And, retail sales has been better. Just the housing market's had a pullback here, but it's held up reasonably well here as well. So, I just think it's sort of been so much bad news out there. And the thing we know about markets, Chris, is that markets climb the wall of worry. And it just seems to be so much worry out there at the moment. And I just think this is, this really could be a really influential sort of point in the market. And this could be the greatest bull market that no one sees coming. That is a real possibility. If we shoot to the last few charts there, Chris, in the report, so looking at the third year, so we've got our sort of often to talk about 10-year, sort of 20-year, 60-year cycles, things like we've got our presidential sort of cycle there. The decade cycle, the decennial cycle, is a pretty interesting cycle. You'll find that within the 10-year block, most sort of bull markets sort of run. I mean, they call the fifth year the year of extension. There's sort of, I think there's only been one fifth year in the history of the markets that have actually been negative. Most of them are really, really bullish years. But typically the lows that come in for the decade are usually either in October of the second year. So think about October 2002, or March of the third year. I think we had a March 2003 as in the Aussie market then. But go back and look at those October 2002s or March 2003s. You'll just see replication, the bearish phase. If you sort of study Gann, typically your markets will sort of run to the end of the decade. So sort of, your biggest surprise comes in the last quarter of the seventh year. That's where I think 8 of the 13th largest corrections in the history have occurred in that last quarter. You get 87, 97. I think 07 as well was, so it's just so many in there. So the markets do follow these cycles here, but this third year is sort of that March 2003. That if you go back and look at a lot of charts there, I know it doesn't work every time, but I'll tell you 80% of the time, March 2003 will be either a low or the first high low. A lot of the times it'll be a really important point in the chart here. And the cycles that are most relevant to us right now are the 90-year, the 60-year, the 30-year, and the 20-year. The only ones missing is the 10-year. Those are probably the most relevant, the ones that we should be looking at there. And we can see here the 90 year chart. So go back 90 year. March was a sort of, early March was a key low, and look at that rally that came out of that period there. Pretty significant. And then if we look at the sort of 60-year chart too, this is the one that I sort of, it's been a really good reference point the last few years there. I think this might have been a higher low as well. I think it was an October low, and then it was a March retest. And then look at that market's come out of there again. It's a pretty buoyant period there. Our 30-year is obviously really important as well, sort of half our 60-year cycle. A little choppier there. This one might be sort of more. When I saw this, I thought, oh, this could be what our market might look like, because there's sort of some hesitation out there still. I haven't seen any sort of really strong selling volumes on no signs of distribution there. The volumes have been sort of pretty good, but without being great as well. So not seeing. Sometimes you get a super deep low, and then you see big volume come in, and then that's when your markets go straight up. But if they're sort of the volumes are sort of not too constructive on the selling side, and they're sort of mild on the upside, just slightly above average, which is sort of that's the way it looks to me. You get this sort of choppy market here, and you just get high, low, high, low, high, low. It's just building phase here. So this is a really good chart here. That 30 years is the one that really sort of I thought, oh, that sort of fits the current environment. You got to look at your cycles. We got to look at also best fit. This is sort of similar to the 20-year cycle as well. Obviously, so the 20-year was sort of was a bit of a building phase as well. A bit choppy there, but that's probably slightly stronger than the 30-year chart as well. But again, nice sort of positive move off the March low. That was coming out of the October 02 low as well. So the March was a higher low. Our market actually found a low. So when the US market was making a higher low, we actually made a new low. That was to do with the commodities being weaker at the end of the cycle. But again, choppy sort of build up there, but just a series of high lows building up here. So so interesting period here. I think the next few days here will be really important. If we see sort of something impulsive off this March low here, we see some reasonably healthy volume come in. We really sort of could get going there. So that NASDAQ there, Chris, is sort of that's had a pretty mild pullback really. So if you think that's sort of off that sort of low there, we sort of went up. The last low sort of went up 1, 2, 3, 4, 5 weeks. So pretty strong rally. That was the one that really that was the first time the NASDAQ really got out of the box there, and that was the first time we saw some relative strength from the NASDAQ compared to other indices. And then we've had that 1, 2, 3, 4 weeks pull back, pretty mild pullback, no aggressive selling there. I think there's sort of like it might have been 2 distribution days, and that whole 4 weeks, and those 2 days were marginal, and there was plenty of like wide range days down where we went through a lot of fill and didn't get much fill. So there just wasn't the aggressive selling coming in there. That if this is a bear market, it's going to last for a long time. It's like replication of the 08, which see so many charts out there talking about that. The price action is not saying that. So I'm the one thing I've got to learn is you got to block all the noise out, and you got to basically follow what the price action is telling us. So price action is the most important here. So I just think it's a good chance. I think this market is looking a lot stronger than everyone thinks. Can't see too much negativity here. I'm just starting to get excited actually. I think there's some really good signs there. So we're really looking for that early March low. This is sort of something I've been looking for I don't know, maybe the last 6 months. So the important was to sort of get our October low, run up into December, basically have some sort of congestion back into March. This is the point. History says open your shoulders and get invested. So I'll personally be looking at that low there last week as an important level. So probably try and get invested here a little bit more and use that as an important stop. So if you're buying around here, then our stop's pretty tight. Might want to give us a little bit of room, but if that's the sort of second higher low, then that's a really important pivot point for the market here. So for me personally, that's a really important level. I'll be watching that closely because we've sort of got our October low. We've got our first higher low. Now I think we might have a second higher low. History sort of said that this sort of builds here. I think only sort of, maybe 10 or 15% of the chance do we actually, of the time do we sort of break a swing low and then sort of build up. So, 85% of the time we just keep building higher lows. So that's what I'm looking at here, and getting divergence there. Just getting all the signs that I love to see technically are all here, Chris, and the pessimism's there, the negativity's there. This really is, if it goes up from here, this is going to surprise the majority of the market here. They will be dumbfounded as to why it's going up. But that's what markets do. It's sort of once everyone's positioned and moved out and sold, and then what happens is that because everyone's underweight and the market it starts going up, then they'll start to get involved here. And then 30 days from now, 45 days from now, when the market hasn't had too much of a breather and everyone thinks, oh, should we get involved, that'll be the point they get involved. And that's the very point the market will start to cool off and then pull back again, squeeze them out, and then they'll turn bearish again. It's just market's there to sort of test your sort of your nerves there, but really just got to let price action guide you here. That's the key.
And then they start the wall of worry if it keeps on going ahead and they're all left behind, right?
Yes.
Well, that's a good summary of the NASDAQ, which I imagine that follows through to the S&P as well, doesn't it? Just slight variations to where the support and resistance is, but will we run through the S&P?
It's perfect to be basically, in that sort of channel there, Chris. Pop out of the channel, come back, do some sort of retest or get near it, and then go again. That's just textbook sort of stuff. It was sort of like, you go back and look through 20, 30, 50 years of, charts there, indices, other indices. It's common, so it's as common as Liverpool beating Manchester United, even though when they've had a terrible season.
Oh, I'm sure that's touched the nerves for a few people. Well,
I was as shocked as anyone this morning to see the scoreline, so pleasantly surprised. But yeah, they tend to play well against it. But this market looks textbook. Looks nothing negative there. Yeah, I mean, we haven't seen the distribution there, Chris. Again, I've sort of gone through those charts in detail. I've looked through some of the overseas charts there, just not seeing, heavy selling through there. Am I to the point where I sort of, maybe I've missed something here. So I've gone through again, had a second look at it, not seeing that. So, I think it looks pretty constructive here. So I love the fact that so many, it's just, like it's up there sort of with one of the sort of most bearish sort of, feels out there that we've had for quite some time. So there is a lot of negative out there. No one thinks this market can rally. So that's sort of probably, you're talking about 95% of people are in that sort of camp right now. No one really thinks, statistically that the October low on the Dow is 21% by the first 2 months, and then 49% within 13, 14 months from that low there. So no one in their right mind right now is thinking this market can rally 49% the Dow from that October low. Even though we've done 21% already and pulled back, the pullback's been pretty mild. If we go to that Dow chart there, which has been sort of the leader, that pullback has just come back in a really mild 3-level, basically a little ABC correction, come back, made a marginal new low, like a little false break, which again we know is bullish there, Chris, as well, coming back to a slight new low. It's taken a long time to sort of, meander back here. That pullback is really, really mild in nature, taking a long time to get down there. If that's the low there, that low holds here, this could be quite strong here. So, this is looking pretty bullish here to me. So, I'd say again looks pretty constructive there. I know it's so negative out there, so many concerns, but we know markets climb the wall of worry. That's what they do. So everyone is definitely worried out there. I think this is definitely going to surprise some people.
Well, that's the US indices, the 3 major ones, which are huge parts of any international market. Everyone references them. If we have a look at the Aussie, that's a slightly different story, is it?
Yeah, it is actually. Yeah. We've just seen a bit more selling through it. I can see the volume's a bit heavier there. So those sort of 4 weeks of sort of selling are a bit heavier. The only positive aspect there is the last 2 weeks we have seen a bit of a bounce off the lows. So we've sort of tested some lower levels, but then sort of bounced from those lows. So that's kind of positive. So to me, it's all about what happens in this rally here. So so basically just sort of see this rally here the next 1 or 2 weeks will be really important. We sort of, if it bounces here and the volume's really light, I'll get concerned longer term. I've still got my concerns here regarding the commodity sort of sector there, just from an historical point of view, what they do. But so far they've held up pretty well. To be honest, the BHP and Rio sort of quite surprised me there. I thought the volumes were quite light running up there, and they sort of rolled off there the last 2 or 3 weeks, and then last week they sort of bounced really aggressively. So they can do that, but there was some volume there as well. So it's like, okay, you can bounce back on light volume, but there was actually some heavier volume there. So yeah, so some choppy out there, definitely choppy, but yeah, this is the one that's just not looking quite as strong as the US indices. You just seen a bit more selling through there. So we'll probably get a better picture here in the next couple of weeks as to sort of see what type of volume comes in on this bounce here. So if the market bounces here, they potentially can come back there. And some stocks have come back. I mean, the banks have had a fairly decent correction there. Everyone suddenly turned bearish, banks, last week after they got thumped. So that's usually a sign they'll probably have a short-term bounce here. But yeah, it's probably, looking at that CommBank chart there, there's a good chart there. It just sort of shows you the stock's been range-bound for pretty much the last couple of years. So, up around that sort of 110, you're on about 21 times, which is historically really high from a valuation point of view. And then that sort of 93, 94 is sort of where the market typically has sort of been bouncing from. Had a couple of touches below there, but that's been the key level there. So, if it comes back down the bottom of that range, Chris, I'll probably get interested down there. But I think this is likely to sort of stay in this sort of price band here for a while. Just historically not cheap here, but I think that sometimes you have a correction in time there where the stock's just sort of traded in a large sort of sideways band here. But yeah, 93, 94 is probably getting down to the buy zone for those stocks.
Okay, well, that's the banks, one of the largest companies on the ASX, and definitely the largest bank, pays a huge dividend. If we look at some of the other companies that you've been mentioning for the last couple of weeks in your reports and updates, you've got corporate travel in this week's report as well, CTD. And just to quickly recap, this descending, whether it's a wedge, triangle, had a few touches. So we sort of highlight those movements, broke out of it below that line, which you've got the red circle around. And then you said
a little overshoot at the end, yeah.
And then quickly came back into it and off it went. What's the update here?
Yes, I mean, it is when those sort of those little overshoots there, they can sort of end trends as well. And then we saw the big volume exhaustion as well, and then pop back in the range there. So they're actually really good signals when you sort of see that overshoot. You often sort of see this more on the upside overshoot rather than the downside overshoot. But yeah, had a nice rally out of there. Had a nice pullback back into the range here. Might use up a bit more time on the pullback here. I like this sector, like this company there. Didn't have to raise equity, in the face of 3 years of sort of pandemic, which is pretty impressive. And it means obviously management has really managed their way through a pretty severe crisis here, probably the worst the industry sort of had. So I do think this is a company that will come out stronger here. So just trying to sort of sweeten the entry a little bit. If we come up a little bit, come back in the range, I'd probably just try and build up a little position there into sort of weakness there. So hopefully it'll meander back a little bit, give us a slightly better entry point.
Nice. Well, the other one that you've had a few times before, John Lyng Group, JLG, similar pattern, not as extreme on the break to the downside. So
yeah, it looks really good, Chris. It's sort of like it's had that little AVC come back marginally just lower there, a little false break on our daily weekly chart. Most impressive thing there is the volume that's coming there off that sort of that sort of high low as well. So that's really, really strong volume there. So pretty good update as well. So that looks strong. So we've got a position there. I'm going to sort of try and add to that. I got my numbers wrong now. I don't know what 685 is. It's not that high. So that was meant to be a little bit lower than that. But yeah, any sort of weakness there, I would probably add into this one there. I think anything around 635, I'd probably add to that.
Well, that's a good one that has a lot of volume, doesn't it? That's a critical component.
Yeah, just like it when, I mean, sometimes you can have this sort of pattern there. You can still sort of push up and go to a slightly high. But that volume there, that says, well, maybe this could be bigger. This might rally further than I thought because there's some actually conviction in the buying, So the one thing I've noticed historically over the years is that when I don't see much volume there, I can still get a decent rally, but it's, they never really push it on to anything extreme. The ones that really, that do sort of occasionally sort of knock it out of the park and really surprise you, they always have the same characteristic. They have this big volume at the start. So not saying it could, it's going to do that, but the ones that really do it, they all have some big volume accumulation at the start there. So it's a good sign here so far that the market likes the stock here. It's pretty involved, and it's accumulating the stock here. So,
as the tagline of this report says, there are no certainties, only probabilities in the markets.
Yeah,
so
correct,
that volume down the bottom really improves the probability that it's going to have a run, doesn't
it? Yeah. I mean, the next chart there, that Audinate, doesn't look too dissimilar. It's actually a nice little sort of tightening up, and we get a little flash below, and then break back up in the range there. That looks pretty good as well. Had good volume the first 2 weeks off the low, but then the volume the last couple of weeks hasn't sort of followed through, so it's not quite as impressive. Can still go up here. We'll still go up. Can still go to like 10.50 there, but maybe it's just going to sort of go back and retest the high or something. That's just not as impressive for me because the volumes is not as high there. So look, if we get a little bit of a pause week and then we get an up week with big volume there and looks pretty good, obviously that would be more positive. But this stage there, it's sort of positive without being exceptional. Whereas the John Lyng's sort of really showing that big volume there, which is really, that's the ones you want to sort of see. That's ones that I get excited where they're the ones that can surprise you on the upside. That's what we want to. We always love to be surprised on the upside, Chris, if we're long stocks.
Well, it's always a good thing to wake up in the morning, see the markets run, and then you see the market open and your portfolios run even further. That's they're happy surprises. Now, Fisher and Paykel, that has been a good, strong move off those lows, the October lows that you talked about for many months coming into it. And the volume sort of seemed lower, got higher, had that pullback. And then what's happening here where it's just churning sideways? How do you interpret that?
Yeah, so it's interesting there because normally when I sort of see it go sideways on no volume, but the thing is with this thing here is it sort of started slowly and then sort of ramped up, cooled off on the pullback, which is a good sign, and then come back in again. But this is sort of congesting here, just nice and tight here. It's just so far it's finding it easy to go up, struggling to go down. And even this sort of this is a pause in the trend here. That's just tightened right up here. So that's like a nice tight flag there, Chris. That's not quite the percentage there from a high tight flag, but that's got the appearance of that sort of style. So I sort of drilled in, tried to look in the daily there, sort of see if there's any signs of distribution there. Couldn't see any there. So saw more of the volume sort of pushing on the positive days. It looks in pretty good shape there. So. Just what's impressed me there is that just the corrections are all small, and struggling to go down. So stock that struggles to go down usually only goes one way.
Well, another one that's on your report this week is Maas Group MGH is the ticker. So looking at that, look at big movements in late 2021. We can say a huge rally. But so that rallied on the left-hand side, made its way working down, seemed to have picked up speed through into the October low, which is the one that we've talked about and you've signalled. As it did that, it seemed like the volume was relatively high. What happened from there?
Yeah, it's interesting here. This is sort of a little bit different than my first sort of appearance of this was, look at that, it's had a bit of a meek, mild rally here, and then sold off on aggressive volume. And then I thought, well, hold on, that volume last week was actually a lot stronger than the previous down week, and it hasn't followed through. So that's interesting. That's not.
Look at the range.
That's unusual.
Is that one of those anomalies you read about with Wyckoff?
Yeah. Yes. Yeah. So it's sort of like, okay, that's sort of, because that should, if you're sort of heading down, impulsive move down like that, big volume, that's pretty bearish bar. And then what's followed there is actually a positive bar inside, kept it tight there, and that volume has really kicked up again. But, wow, okay, that's a really interesting bar. That's not something you see too much of. It's sort of 9 times out of 10 you'd see that follow through. So it hasn't done so. I did go and look at the report. The result looked pretty strong to me. Maybe the expectations was a little higher. We saw the same thing with corporate travel. Corporate travel actually had a pretty good result. Sold off for a day, and then within a couple of days, it went straight back up again. So sometimes you get a little shakeout here just to sort of stir things up here. But the Maas there, when I drilled into that chart, I thought, okay, that's actually not as bearish as I first thought. It's actually, if it actually can hold here and then break above that bar, so I sort of think this is, I can't remember, there's a trading theory around sort of, I can't know what's called, could be like stats or something, but basically sort of when you sort of tighten up here on those little bars there, then you're sort of following that break. So you sort of see how this has sort of gone down here. It's just gone down every day. Then we got a small bar here and then tight here, but we did break above it. So it's the first bar that we actually moved above the previous high all the way down here. This is really impulsive selling here. So that just changed. That was sort of like, we changed it there. So I thought, okay, well, if we go above last week's high, that'll cancel out this pretty negative candle, this negative view there, because that's a pretty big bar. That's a sign of accumulation taking place down there. So I like the fact that we've actually, this MGH just came back and retested the IPO sort of low, gone to a new low and then rallied here. But yeah, so look, you want to have a tight stop on this one here, but this is definitely one just to keep a close eye on. I thought, wait, this looks pretty interesting. Just that price bar, the volume bar, really stood out as sort of something a little bit different there. And so they can do this. Sometimes they can have this. They can run up, pull back, short and sharp, and then that's your first high low, and then you build from there again. So yeah, it's probably not going to rush away here. It's not sort of a momentum stock that sort of it's going to have to do a little bit of building. But yeah, it looks all right there. Yeah, but interesting week here. So yeah, I won't be putting a report out next week. I'm sort of I'll be traveling on that day. But yeah, it should be a pretty interesting week ahead here for markets. I think if we see a bit of positive price action and we see some positive volume through the market, that'll be pretty positive there. I missed a chart here. Sorry, the Reece is this is similar to the market there. Basically, we've got our low there, made a sort of high low in October, and then sort of pushed on through there. We sort of retreated back here. So we're not taking off here, but we're sort of building quite nicely. We've just come back to sit on top of the previous high. If we can find a bit of support here around that 1550, sit on top of the old high, that's constructive there. So I'm just seeing a lot of this type of price action there where we're not taking off, but so it's a little bit of a like watching the paint dry sometimes. But it is constructive. So yeah, sometimes the sort of bases are built over time, takes a bit of time. But still reasonably positive there.
Right, well, they are the charts to be looking at over the week. And as you said, there won't be a report next week. We will do the Friday video a day early this week, won't we? We'll be doing that on Thursday.
Yeah, do it on Thursday.
There we go. We've got a few changes this week, but it's a good report that we've had this week, especially drilling down into these cycles. So just looking at these years ending in 3, and then 60 years ago, 30 years ago, you have done some other videos in the past, especially when you were looking for the market highs and then coming into that October low. You use these cycles a lot. So we will put a link on the screen into a video where you've drilled down into cycles, which might help with a lot of questions that we'll probably get from the cycles. But to that point, we'll wrap and say on the right-hand side, there's Gary's normal Tuesday report, the whole playlist, the Friday report playlist, where we go through and have a look at these trading strategies and also consolidated things like these cycles, different trading strategies like high and tight flags, VCPs, springs. And then on the left-hand side is Gary's handle. That we say thank you very much, Gary Glover from Novus Capital.
Yeah, thanks, Chris. Could be a very profound week on the market there, or otherwise I'll look very foolish in a couple of weeks' time. But I know the interesting sort of signs there right now. So the hallmarks are there. Hey, also for anyone who's sort of reached out in the last week or two there, I've been a little bit inundated with sort of having to move a few houses and around But as of next week, I'll be life will remain to normal, and if anyone I haven't sort of reached out to or got back to, I will next week. So apologies for that.
There you go. Thank you very much, and we'll hear from you next week.